Good afternoon. This is Brian Split with Allendale for your closing commentary, not only for the week ending September 30th of 2011, but that also closes out the month and the quarter. And what a month and a quarter it was. We did finish the day sharply lower in the grain trade, really driven by the bearish USDA report announced this morning. And as far as settlement prices, we'll run through that real quick here. December corn down 40 cents, which is the limit. That was at 592.5, and that is down 46 cents on the week and down $1.75 on the month. The new crop December 12 was down 17 3/4 on the day at 565 3/4. That is down 12 3/4 cents on the week and down 99 1/4 cents on the month. On the November soybean contract, we were down 51 cents today at 11.79. That is down 79 cents on the week and down $2.78.5 on the month. Novi 12 beans down 45 cents today at 11.94.5. That is down 58 3/4 on the week and down $1.97.5 on the month. And into the wheat markets, we did have December Chicago down 45 cents today at 609 1/4. That is down 31.5 on the week, down $1.82 1/4 on the month. The December Kansas City contract down 36 cents today at 704, down 27 1/4 on the week, down $1.91 on the month. And December Minneapolis wheat down 3 1/4 today at 892 1/4. That is actually up 41 1/4 cents on the week, yet down 54 1/4 on the month. And as far as what the report had to say, old crop carryout now estimated at 1.12 billion bushels, and that changes the stocks to use numbers, assuming that we are not changing any current yield on the crop that is coming to harvest or any further demand estimates. But just that new number alone would suggest the stocks to use has gone from a 5.3% to 6.9%, and our economic model suggests that we still have a possible target of $5.30 to play these numbers out. As far as the trade next week, we will have 60-cent limits for corn based on the fact that both December and March did finish down the 40-cent limit today. That would put a potential for December corn low on Monday's trade of 532.5, which would put us right at that objective. On the beans, the bean number really was not bearish. It came in at 215 million bushels. That's 10 million bushels less than trade estimates. But with the corn market and the wheat market breaking, corn or soybeans really had no choice but to follow. Again, based on these numbers, the supply and demand estimates would suggest that 12.20 really should be where this market is valued at. So we did finish about 45 cents lower than that here on settlement today, or about 40 cents. And we do have the potential for that to possibly bounce just off of these estimates, but it's going to be hard to do that if corn is still trying to reach its objective. The next supply and demand report will be October 12th. That is a week from next Tuesday, and that is going to be the next time that the USDA comes out and adjusts any yield estimates and any demand estimates. So the fear in the market with this momentum pointing down, obviously, is that number one, we've got the big picture economic concerns that could continue to provide pressure. And number two, as we go into that report on October 12th, is there a possibility that the USDA could come in and start increasing yield? They increased the bean yield on the last WASDE report, and a lot of the early harvest reports for corn have been better than expected. So what happens if we do see the corn yield bump up a little bit and the bean yield bump up a little bit? That could provide even further downside targets to go. As far as some interesting tidbits of information, the last time we saw this type of a move was in 2008 during the all-out commodity liquidation during the subprime mortgage financial crisis. The biggest monthly loss for corn in 2008 was $1.37. Again, this month's loss was $1.75. The biggest monthly loss in 2008 for beans was $1.81, and again, this month was $2.78.5. So this move is by far exceeding the pace of the 2008 break. Beyond that, as far as the meat contracts, meat's had a great day today. Hogs up, October up the $3 limit in late Globex trade at 93.37. We had December up 202 at 88 even. We are still hearing talks of the need for China to buy more pork, and we also had some very massive spread unwinding taking place in the market. A lot of the trade has been seasonally bearish, the nearby contracts, and fundamentally bullish, the deferred contracts, and we saw a massive spread unwinding here today with the nearbys up sharply and the deferred contracts near unchanged on the day. As far as cattle is concerned, October up 210 at 122.50, Dece up 155 at 122.80. We are seeing some spillover from the very strong hog trade, but we also had some very strong cash trade today. Reports of 120 to 121 in Kansas. That's up $425 on the week. So these markets are being supported by cash trade. As far as the big picture outside markets are concerned, the CRB index down for the most on both the month and the quarter since 2008. We had some weak Chinese manufacturing data that did provide some outside market pressure, and we still have the ever-persistent concerns about the Eurozone, even though Germany was able to pass its vote on the new plan to extend the cap to the limit that this financial committee in Europe can lend to countries, can use to buy sovereign debt and use to recapitalize banks. So even though we had some positive news off of that bounce off of that was about a one-day event. As far as where the stock market is, the Dow futures down about 195 points at about 10,904. We've got the S&P down about 24 at 1132.25. The crude oil market down about $3.20 at 78.94. So we are finishing up the week below $80 a barrel there. Gold is up a slight $4 an ounce at 16.21, while silver is down about 50 cents at 30.02. And we have the dollar late in the day on its highs, up 60 points at 79.20. We do our weekly meetings on Monday afternoons, and one of the things that we've mentioned over the past couple of weeks that is concerning for commodities continuing to move forward, as the weekly dollar chart does suggest that we have some further upside potential to go. And 87 to 88 could be a very real target with, again, current trade just above 79. So a lot has happened, of course, in the past week and month. And obviously the markets that we watch closely have taken a very good beating. And if you have any questions or want help regrouping after these moves, please by all means give us a call. We're here to help. We're here to think of strategies to protect you from where your risk lies. So our number is 1-800-2-MARKET. That's 1-800-262-7538. You can also look us up online at www.allendale-inc.com. And as always, good luck to you trading next week. Thank you.